Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at a kind of an interesting type of pattern here. Holy cow, this thing's moving fast. Let me get my targets in place here. So looking at the gold, we just kind of had this fake break high previously right at 9 o'clock, and that fake break high really just slapped prices lower, and they tried holding it. They tried bouncing off 7.9. That didn't really work. There wasn't any good setups for a long trade. It hit the lows here at 1207.1. Again, not the best looking setup, but you maybe tried to get that. You would have got a scalp out of it anyway. And then it broke right through, and after it broke through those two levels, it got hammered all the way down to these lows here, and actually broke through the bottom at 1205.8. So right now what's happening is this previous support once was support turns resistance, and that's kind of what we're seeing right now, because we break the lows right here, and they get just slapped right through the lows there. Holy cow, that's a big brush. We get slapped through the lows down here, and they try pulling it all the way back up, and where do they turn around at? Right off of that 1207.9 again. So that level is acting as a very strong area of resistance. We to the tick test it and turn straight back around again on a bearish move. So very, very bearish inclination here on that test at 7.9. So I like the look of it. So I'm short 4 contracts at 7.3 on that turning point, and just looking to go back down to the lows. So looking for 1205.5, front running it a little bit, maybe 5.6. But just looking for that low test to come right back down again. If we're failing out this backside here, we should push all the way back down to the lows and maybe even continue lower. That's kind of what we're looking for right now. So we're taking all in, all out, 4 contracts at 17. So if we get that filled, we're looking at 68 ticks on the trade. So far, I mean, it's just been a rocket ship. It just got slapped straight back down again. There's hardly any... any support through here. It's just ripping right through these levels. So it looked like it was going to go pretty quick, but now it looks like it may be slowing down a little bit. I'm not sure. So what we'll do is we'll give it a little bit of time here, and we'll see if it wants to start turning back around again, hit that target at 1205.6. You could also go to 5.8 as a more conservative target, but again, with them holding this upside here, chances are they're going to break through those lows again at 5.4. So that's kind of what I'm looking for right now, but it kind of got a little bit of a double top here at 6.8 as well. So, I mean, there's just more and more things stacking up for resistance in this area. You can see after they break through it, they retest it, and now they're starting to turn right back around again. That's honestly, this could be another entry short right at 1206 even, and that's kind of the idea that we're looking for here. So turning right back around again, a possible aggressive add-on at 1206, which is just triggering right now. Otherwise, we're looking for continued shorts down into 1205.6 and maybe even farther. But the overall goal right now is going to be to 5.6. So we'll give it a little bit of time. We'll be back. All right, there we go. We get a push down and we fill that target down here at the lows. Just a beautiful move down. This is kind of what we were looking for. So just a gorgeous rejection right off of that once support turned resistance at 7.9, and we get slapped right back down to the lows. So beautiful, beautiful trade. Quick little one. I mean, it wasn't. It barely had to pause the video much, honestly, but let's try that again. Taking 4 contracts off at 17 gives us 68 ticks on the trade, and just a gorgeous move down. So $680 in the bank. That's going to be the trade for today. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com, and as always, we'll catch you next time.